unlikely. So you're right about the concern for the exchange rates. But however, I think there are other ways, other policies other than the Bank of Japan's monetary policy who can help ease the pain from the weak yen, which is the FX intervention. Japanese government can intervene directly in the exchange rate market to help, support the yen.
Okay, if it's direct intervention, hands-on, we're at 138.42 right now, early Asia on a Thursday. Historically, I mean, that is within the intervention band. That's when it's happened before, yes?
Yes, indeed. So obviously, we also need to take account of the inflation. But I think yen is definitely at the historically low level. And perhaps more importantly, it is a speed at which yen has weakened so far in the year. And I think the speed so far actually warrants Japanese government to intervene because Japanese can get sympathy for trying to deal with excessive volatility in the exchange rate.
Just quickly, we're just going to cut off just for a second. We're going to break some of the data that is coming through from Japan. The seasonally adjusted trade balance coming in at minus 1,928 billion yen. So that is a little bit of improvement from the trade deficit that we did see of 2.385 trillion yen coming through for the month of May. Imports up by 46.1%. You had exports up by 19.4%. Both of those were above expectations. Some pretty strong numbers when it comes to exports to China, exports to Asia, exports to EU at 22.1%. In terms of the Japan-June trade balance that isn't seasonally adjusted, that was only at 1.38 trillion yen versus the minus 1.5 trillion yen that was expected. So it's a little bit better than we did expect when it does come to the trade balance. And just to get back to what you were talking about, Okubo-san, when it comes to what the BOJ could potentially do, it might not necessarily be that the BOJ moves on the yield curve control, but if you do see the yen continuing to weaken past that 140 mark, considering the yield differentials that are going to be maintained, even if you're looking at the yield differential widening just today between the JGB 10s and the US T10s, could the MOF step in and intervene on the currency?
Yes, I think that's so much easier. I mean, once Bank of Japan actually give up from the pressure of the hedge funds, Bank of Japan will also be losing credibility. And again, Governor Kuroda did surprise market in the past when it comes to introduction of negative interest rates. But then Governor Kuroda has been very clear that the raising interest rates in the middle of recovering economy is a bad idea, and the Bank of Japan is very unlikely to let interest rate rise while Bank of Japan is still trying to eliminate deflation from Japan.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.